Good morning, everyone, and welcome to a new episode of Merrill's Monday Morning Market Madness. We're going to be taking a look at exactly what's going on in the Phoenix housing market and what we think home values are doing, and hopefully give you some really valuable information to help you make more informed decisions with whatever you might be doing or thinking about doing in relation to your real estate. So let's start by looking at the month supply of inventory number, as we always do. Active, we have 8,436 active listings, 13,722 pending listings, 9,470 homes that have sold in the past 30 days, for a current month supply of inventory at an all-time low of 0.89. So, I think well, okay, let me back up a little bit. So first of all, the month supply of inventory, what would be considered a really balanced market, is like 4 or 5 months supply. That means that, there's so many homes available for sale, buyers get to be choosy enough that, there's some negotiation room, and home values in that scenario would be relatively flat. Like, we wouldn't expect to see much appreciation going on, but we probably wouldn't see home values falling either. When you start getting into a month supply of inventory of greater than 6, there's so many options for buyers to choose from. That's where home values would start to go down because buyers can be more aggressive. And then when the month supply of inventory gets to be, 3, 2, it's definitely more of a seller's market, and buyers have to be more aggressive with their offers if they want to get one accepted. Right now, month supply of inventory at an all-time low at 0.89. It's never been that low before. And what's happening is almost every house is getting multiple offers and selling above list price. The average sold to list price ratio in a lot of submarkets and a lot of price ranges right now is actually like 101%. A lot of homes are selling slightly above the asking price on average. So it's intense out there right now. So what's the trend, though? So taking a look at the month supply of inventory, today I told you it's 0.89. Well, is it getting better or worse? Is inventory going down or is it going up? Is it becoming more of a seller's market or more of a buyer's market? Right now, every day, it's becoming even more and more. We're already in an extreme seller's market, and it's getting more extreme every day. Last Monday, we were at 0.94. The Monday before that, 0.98. The Monday before that, 1.18, then 1.24, 1.42, 1.59, 1.79, 1.96. So those were like the last 2 months or so worth of inventory, and it just keeps on getting more and more extreme all the time. So we're definitely seeing, not only are we seeing a seller's market and home values appreciating rapidly, but it is very extreme. It's not, it's not getting ready to balance out. I get a lot of buyers who are saying, well, maybe I should hold off. Maybe the market will level off. So far, there is no sign of that whatsoever. We just keep on getting more and more extreme. Inventory is just getting less and less every single day, and the market is it's intense. And it's growing like crazy. There are new builds all over the place. But the thing is builders cannot build the homes as fast as people are buying them. The population has grown so much, and there's just so much demand that the builders cannot build, to catch up the inventory. That's why inventory is still going down, despite all the new construction that you're seeing and all the new homes being built. One of the things that is really, really fueling this is interest rates. I am going to do a quick little... oops, hold on. I'm going to do, I don't know if I did this right. Okay, so this is the first time I've tried to do a screen share. I hope that's working right. I haven't done this before, so forgive me if you can't see this, but hopefully you can. This is a website. I've talked about it before. You can pull it up. It's FreddieMac.com/PMMS, and it takes a look at what average interest rates are for Freddie Mac loans. So right now, hit an all-time low of 2.98% on a 30-year fixed, which is with paying 0.7 in points or fees. So the this is kind of a chart of what rates have done over the past year. So you can see obviously a pretty solid trend line, but you can also change the date range. Look at what they've done over the last 3 years, super solid trend line there. Really, the only time it ever even got remotely this low was in 2016. Your 30-year fixed got to like 3.4. It has never been below 3% before. And then of course, it's kind of fun to look at the all-time high back in 1981 where interest rates hit 17 or 18.22%. But the rates are just ridiculously low right now, and I definitely think that is fueling the market and really, really causing buyers to say we've got to get into the market now, and that's just creating more demand and more pressure on the inventory and on the market. So if you're a buyer and you're thinking, well, maybe I should wait. Maybe I should wait. Maybe we should rent another year and see if the market calms down a little bit. The problem is home values are probably going to go up by 10% over the next year with how extremely low inventory is. So prices are going to be rising. But even if I'm wrong about that, let's say prices don't rise, we're also going to have a situation where interest rates, I don't know. No one has a crystal ball on this stuff, but I'm finding it hard to believe that interest rates will ever be this low again. And if rates go up, that's going to affect your affordability. So take a look at some of these charts that I pulled up on Zillow. This is just Zillow's page for Maricopa County, looking at the data that they have for homes in Maricopa County. So this is their average days on market chart. You can see ever since 2011, it just keeps getting lower and lower and lower. Then we scroll down a little bit more. This is their median list price for the information they have on Zillow. And this only goes to January of 2020. So for whatever reason, they haven't updated it, but it just keeps on going up. But then the one that really strikes me as scary, this is the rent index. So again, this only goes till January 2020. Trust me, the rental market is even more insane right now than the sales market. Average rent prices just skyrocketing, just absolutely skyrocketing over the last couple of years. Great for people who own investments. If you're thinking about getting into the market for investments, it's an insanely great time to do right now because you get to buy a home with a super, super great rate, while at the same time, rent prices are just going through the roof. So you can get some pretty nice cash flow on these properties right now. So if you're renting, your rent is just going to keep on going up like crazy. And if you wait to buy, the interest rates are probably going to go up a lot, and that's going to affect affordability. So even if home values stay flat, or even if home values fall slightly, if you don't buy now, it's going to end up costing you more if interest rates go up. Let me show you what I'm talking about. So this is a mortgage calculator that I like to use, mortgagecalculator.org. Now, there's too many variables with mortgage insurance and homeowners insurance and HOA. So I took all that stuff out. I'm just looking at the principal and interest payment. So let's say you bought a $300,000 house, you put 5% down, and you had a 3% interest rate. Your principal and interest payment on that right now, $1,201.57. If rates go up by just 1% and we change that to a 4 instead of a 3, your monthly payment goes up to $1,360. So an increase in your monthly payment of $160 a month. That is basically equivalent to an additional $30,000 or $40,000 worth of, maybe even $40,000 or $50,000 worth of purchasing power in that change of interest rate. So again, home values could drop $30,000 to $1,000, but you could still end up having a higher monthly payment if interest rates, I don't know if I'm making sense. It makes sense in my head, but the point is, if interest rates go up, even if home values were to fall, it would still end up costing you more money. So that is why I think now is the absolute best time for everyone to buy, whether you're looking to buy for yourself or you're looking to buy an investment property. The market is it's great right now. And if you're a seller, it's also great. There is almost no competition, and it's a great time to get a very, very good price for your house. But don't get me wrong, I don't think we are in a bubble. I don't think we're moving into a situation where suddenly home values are going to come crashing down. I think it is literally just a really extreme supply and demand issue. Eventually the builders will catch up and it'll level off. But I don't think we're heading to this massive crash where home values are going to plummet. Yes, we did see that in 2008. And I think that's what everyone's really paranoid about. But there's a lot of differences between what's going on now and what was going on in 2009 and 2008. And that's really a whole nother conversation. But I would say the biggest difference is that no one is getting these subprime loans. No one is getting interest only and negative amortization loans. It's all, for the most part, 30-year fixed. Occasionally someone might get a 15-year fixed. No one's doing adjustable rate mortgages. Loans are still, they're not impossible to get, but you can't just make up a number and tell the lender that's what you make. You have to prove everything, and lenders are being responsible, making sure that only people who can really afford these loans are getting them. So, man, lots going on there. And let me see here, stop that screen share. Hopefully that worked. But anyway, hope you found this information helpful. If you have any questions, you want to know more specifically what's going on with the market in your area, be more than happy to help. Please hit us up in the comments, and I'll talk to you soon. Thanks.